Do you know that because of the recent IndiGo mess, IndiGo's stock has crashed almost 16% from December 1st till now? Yes, India's biggest airline with more than 60% domestic market share is facing one of the worst crises in its history. And while IndiGo is going through losses, something interesting is happening in the market. Other airline stocks are rising. SpiceJet has jumped sharply in the last few days. Akasa Air is also seeing improved investor interest. So the market is clearly shifting its confidence away from IndiGo and towards its rivals. So today we will talk about the IndiGo mess, how this crisis started, how much the stock has fallen, how people and investors are getting affected, and how other airline stocks are rising because of IndiGo's fall. Hi, I'm Khatija and you're watching Lokmat Times. Before we move ahead, do subscribe and press the bell icon for all the latest updates. Now let's break down what exactly happened. This whole mess started because IndiGo was not fully prepared for the new flight duty time limitations rule. These rules came into effect on November 1st. Pilots got more weekly rest from 36 hours to 48 hours, and night landings were reduced from 6 per week to just 2. Normally, airlines prepare months in advance for such big regulatory changes, but in IndiGo's case, the planning was weak. Their whole model is built on maximum aircraft utilization, lots of night flights and very tight crew schedules. And suddenly, with these rules, that entire system collapsed. IndiGo later admitted that they had made misjudgments and planning gaps. And because of that, there were simply not enough pilots to fly so many flights. This stress on the roster was not new. Pilot unions have been complaining for years about impossible schedules, lack of rest and fatigue. Well, on top of this, the airline also reported a massive 2,614 crores loss in Q2 FY26 after making a profit in Q1. There were minor tech glitches, winter congestions and holiday season rush, all happening together. And from December 1st to December 7, IndiGo ended up cancelling over 2,000 flights. Their on-time performance fell from 89.8% to as low as 8.5%. Now imagine being the biggest airline and suddenly performing worse than almost everyone. The DGCA immediately stepped in and issued show-cause notices to IndiGo CEO Peter Elbers and CEO Isidro Percuras. The aviation regulator said there were significant lapses in planning and resource management, holding the top leadership directly accountable for the operational collapse. Now let's come to the stock. IndiGo's parent company, InterGlobe Aviation, has seen a fall of nearly 16% in just few days. On December 1st, the stock was at around 5,790 and by December 8, it touched an intraday low of 4,900. 7 straight days of decline. One of the days even saw an 8.7% single-day fall. This fall has wiped out nearly 30,000 crore in market value, around $4 billion. For investors who bought at November highs, the losses are even bigger at around 20 to 25%. But the impact is not only financial. The scale of disruption has been massive. According to official numbers, over 9.55 lakh PNRs were cancelled during this period, and refunds crossed 827 crore. Passengers across many airports faced long delays, confusions, and overcrowded terminals as flights kept getting cancelled. Because IndiGo pulled out so many flights from the system, fears on the other airlines surged sharply, with several metros routes showing 2 to 4 into increases. According to multiple reports, the government even had to step in, advising airlines to keep fares within reasonable limits and arranging additional trains on certain busy routes. Even inside the company, the mood is low. Pilots and crew say they are exhausted, especially after years of being pushed under tight rosters. And now with rushed hiring and emergency rescheduling, their workload has gone up even more. But here's the most interesting part. While IndiGo's stock is falling, some other airlines are seeing investor attentions. SpiceJet's shares jumped sharply, nearly 14% in a single day, as investors expect some passengers may shift to other carriers due to IndiGo's operational disruptions. Smaller carriers like Akasa Air are also being watched by investors. In this way, IndiGo's difficulties have created a temporary window of opportunity for its rival to gain market attention. As per the DGCA, operations may stabilize by December, but full normalcy could take until February 2026. Until then, the ripple effects for passengers, airports, investors, and the aviation sectors will continue. So, this IndiGo crisis has shaken the aviation sector. disrupted passengers and hit investors hard. Now we want to hear from you. Are you invested in IndiGo or are you watching the aviation stocks closely? Share your views in the comments below.